Midday update for the U.S. stock market, and it is July 9th. I'm Rich Positive, a critical point. I'm afraid the model myself got sucked in after all on this decline that turned out to be what's called a shakeout. If you use Wyckoff analysis, that's more of a technical analysis form, but it's heavily on volume and therefore a little more on supply demand than just watching prices. At any rate, it's called a shakeout, and it occurred within an uptrend. Lots of times shakeouts occur in sideways ranges rather than uptrends. And if you want a little story that might be true or not, how you look at it is, okay, the smart money sold the night before and the overnight market beat the market up. And then the next day, everybody follows through selling because they're scared, but what they're doing is this money's buying up all that stock. So they soaked up the supply, and today everybody's waking up to that, and they're soaking up that supply and putting the market not only back up, but the futures are already at a record high. Now, what the model's done is flipped from calling the earlier than desired level 3 top an alternate forecast and then calling the level 2, level 1 tops. It flipped to the forecast we've been using the last few weeks. It's gone back to, I think, June 29th maybe was a level 3 top. And now it's saying, look for the next level 3 top next week. And any level 3 top is eligible for the more important level 2, level 1 top. It's possible for this market to top as soon as Monday for that. What we may have witnessed is a little bit of preliminary supply, meaning, yeah, the smart money sold some, maybe they bought back some, but they're still preparing to sell for something larger and lengthier. So we can still get a top next week, but what I have to warn you is I think there's some big players have given up trying to be bearish this summer into fall, and I think they're really saying July can be a good up month. I think they're throwing in the towels saying the latter half of this year could be a very good second half and add it on to the first half so that we have a very good bull market year. I think they're just dialing in more of these economics as people get back to work and get going, and we're going to fix the supply chain by the fourth quarter of this year is my forecast, no later than early next. So it makes sense why some would finally get back on board here and want to be bullish even at record high prices. On the other hand, that still does not negate the possibility of the most important type of downturn can occur in the next few weeks, not in the sense of a sizable decline, but just some kind of dip there, some kind of respect that it is time for them to readjust their portfolios. Now, there are some players out there who study in greater detail the money flow. And they actually look at the types of traders and what are they doing, what are they investing. They look at like gamma. They look at the volatility people, okay, that are trading those things. And then they look to convert that to how many billions of dollars will be traded on those strategies and what would be a level, in other words, convert it to a price level when they may be forced to give up, that they're in trouble. And yesterday, some were saying you don't want the S&P 500 to go below 4250, which, interesting enough, we had some objectives down near that level, okay? But today, those objectives are gone because of the new record high. Maybe we'll put them back on or not. But there could still be some concerns here that this whole money flow can still swing bearish. Maybe all we're looking at is just short stabs as a process, and we just saw part of that process, and just short stabs for the remainder of this month before it just settles out where they want to be bullish into the end of the year. And keep in mind, in September and October, we can also get some bearishness just from the seasonal traders. Because over the past 200 years, September and October have been the worst months of the year. I don't think that's working so well. And November, December, the best months of the year, that's actually still working pretty good. So still a bull market. Probably is no sense playing for this type of down move, but I feel like I have to since the most important fluctuation. But I already got a little mud on my face. I'm a little upset to get caught up in a little bit of preliminary supply and or shakeout by the smart money. Normally I'm with the smart money. It bugs me. At any rate, I'm not going to chase after this. I'll start over next week and see, should I be chasing after this or should I be looking for yet another opportunity for another stab lower over the next couple of weeks. Past results are not necessarily indicative of future results. Have a great day. Have a great weekend. Thank you.